Hi, this is TradingETFs.com with a market summary for January 6th, 2016. And what I'd like to do is spend a little more time on a few other ETFs tonight and kind of take a look at what the general market is setting up for, or if we can determine what the market's setting up for. So here we have the Diamond ETF, once again, DIA. You can see that today it closed down a little bit under 169. Actually, closing price was 168.94. You can see it's now leading the indicator to the downside. I had mentioned before that usually when we cross below the zero line, it will either come back up and retest the zero line, or if it's a very serious correction, which is what we're seeing right now, you can see it continue straight down. But right now, I still think that, based on what I can tell in my oscillator here, that we're getting oversold, and we're probably going to see some type of a bounce over the next couple days. I'm switching the chart to my short-term oscillator, so you can see we are down at the very low levels of where we've turned before. So my expectation, once again, is that we try to rally and see if we can get back up to the zero line in terms of the oscillator. So I'm still expecting to see some type of a move to try to get us back up, and then most likely what we'll see is the market turn. But again, what I think doesn't matter. What matters is simply what the oscillator is telling us and where it's currently at. Right now, we've now spent 2 days below the zero line, and we're extremely oversold short term. So we should start seeing some type of a bounce, and at that point we'll evaluate to determine if we get a failed rally. Then we will look to enter the VXX ETF that I've been talking about. So let me go ahead and switch over to the VXX and see how that's looking like, or what that's looking like and shaping up to be. So here we have, again, a couple days ago, looking for a big dot to the upside, got it. Yesterday, price went down, oscillator continued higher. Today we got another up move. We didn't close above 2 days ago's high, but yet the oscillator is continuing to rise. You'll now see that we're back at the same level we were at in mid-December, and right now you can see the divergence here, where the oscillator is at the same level as what the price was back in this range, but yet it looks like we're going to continue higher. And so I'm still looking for this trade to set up. I'm not ready to say buy the VXX as of yet, because I still want to see the short-term oscillator come down close to that zero line. Yesterday we got a move down. I wanted to see it continue lower to the zero line, so that would set up a buy. It didn't do that. It went ahead and turned. So at this point, we, on a long-term oscillator, we're above the zero line. Now it's simply a matter of where do you enter the trade. So to me, it looks as if we are definitely going down in the market. It looks like the volatility is going to rise, and so it's simply a matter of setting up the trade. And so right now, it's just a matter of being patient and looking for the short-term oscillator to come back down close to the zero line, and that would be the time to be able to enter a trade with much lower risk of having it go against you. Not that anything is 100% fail-safe. Trades will go down, but it's about when you enter the trade, you're trying to eliminate the majority of the risk to the downside, so that if you do see it go down and it takes the oscillators farther oversold, then you generally can wait a couple of days to be able to enter, or to be able to exit the trade, because it was already oversold to begin with. So that's what we're looking for on this trade setup. I'm going to go back to another ETF, the IWM, and I'm going to show here in the short-term oscillator we are down at the lows or at least approaching the lows of mid-December, the end of September. I had mentioned in my newsletter that I had sent out a few days ago that I was watching the IWM, and my expectation was that we were going to go down to the 107.50 area. We're right now at the 108.50 area, and today the price closed down at looks like it was 108.57. So we're about $1 away from where I thought the price would go. This is also setting up for an oversold trade, but we are not there yet, and so right now it's still just wait and see to see if we can get a better setup. The reason I say that is because when I look at the long-term oscillator, it's showing that we are the price is already leading the oscillator down. The oscillator's got some catching up to do, and we're not even close to this oversold level here back in September 29th. So what we need to see is we need to see some type of stability in the long-term oscillator before we want to be able to get into a trade expecting price to go to the upside. So right now that's still just a wait and see. Changing things up a little bit, I wanted to go over the 10-year note and show what the oscillator is doing there. First we have a chart of the LT, the long-term oscillator, and you can see that we are moving down. We're going to test this zero line probably within the next few days here, and that'll determine whether we're going to be able to stop the downside in the market, or whether the market is going to just flat out collapse from here, meaning that the yield is just above 2.175. So people are still using this the 10-year bond as a safe haven trade. So if we continue to see price go down and the oscillator go down below the zero line, then people are preferring to be in safety versus risk. And so that directly ties into whether or not the downside in the market is going to be done if we see the Treasury note here try and stabilize around the zero line and maybe even turn back up. We're not there yet to be able to make any type of conclusions. Just kind of wanted to put this on your radar so that you can see how things are shaping up at this point. We're coming to a very critical point for the market to determine what direction it's going to take. Let's take a look at the short-term oscillator on the 10-year note. You can see that we're also approaching the oversold levels. So it's interesting that we have rates going down as a safe haven trade, and we're getting to oversold levels, which means that we will most likely see rates rise over the next couple days to alleviate this oversold position. And at the same time, we're seeing the Diamond ETF, we're seeing the IWM ETF also oversold. And so we should see in the next couple days, if rates do in fact start turning and moving up a bit, and that would signal that the market is also turning and moving up a bit, setting up the next trade. The other thing I wanted to look at, the other ETF I wanted to look at was the dollar ETF. That's the UUP. And let's take a look at the short-term oscillator here and see what it tells us. So we've got price here. It surpassed the high of mid-December time frame, and we saw it take a little bit of a pullback today. But the fact that it closed higher than mid-December's closing price tells me that we're going to try and test this 2605 level. And our oscillator is in the overbought area, but really not anywhere near extreme. You can see that this was extreme here in 3 different areas. But right now, we are probably just anywhere between 1 to 3 days from being able to be down at the zero line. So we're certainly not overbought in any way on the dollar in the short-term oscillator, at least. And so it looks as if we're going to see the dollar continue to rise here, and at least in the short term. And let's take a look at the long-term oscillator and see what that's telling us. So we got to the extreme overbought level here we started to lose momentum, started coming down in the dollar. This was this period of time here, the oscillator was moving down, continued to move down, tried to bounce a little bit, didn't do very good job of it, turned back down, coming down to the zero line. We kind of went sideways here, and then we got two big up days on the oscillator, and we see that here in the price. We went from 25.45 up to 25.85. So if you compare that to the chart that I gave you on the Dow Jones Industrial Average, the DIA, when I talked about the 8 days that it spent going sideways, and I said that on the DIA, if the oscillator went down below the zero line, it was very unusual for it to turn right back up rather than keep going down. And here we have the oscillator was going sideways for about a 5 or 6 day time frame. We went up this time, and you can see now that it looks like we tested the zero line, and now we're starting to move back up. So that's the difference with the oscillator when you approach the zero line is if it's going to go sideways, when it has a big move, that direction that it has a big move in is usually the next trend of that ETF. And so that looks like it's definitely, like I said, continuing to go up at this point right now. Let's take a look at some of the more aggressive ETFs like the IBB, which is the biotechnology ETF. And let's see what the long-term oscillator is showing us here. So we've got two overbought areas. You can just take a look at this chart itself, and you can see where the zero line is close to the top of the chart, which means we've spent an awful lot of time down below the zero line in terms of price, and we had big declines in the oscillator going back to that September time frame. So here we are, late October, early November, we moved to the upside. But you see the price is still going sideways, and yet the oscillator moved up to the overbought, came down, tested the zero line, turned, came back up, tested that overbought reading again, which is over at the 0.011% level. And so now we're turning back down, and see these gaps are now getting wider. And so typically what we're going to see here is we're going to see this not only get to the zero line, but based on what I'm seeing on this price chart and how long it's been basing sideways, and we're now at the lows of this range, it looks as if the oscillator is going to continue to the downside below the zero line, and that means that we're going to set up prices to come back into this 305 area right in here where you've got some support. So in terms of oscillators, this was one of the few ETFs that was staying in the positive area for so long, and now it looks like the strength in the oscillator is now turning, and most likely going to see that go below the zero line. Here we have the short-term oscillator. You can see that we're at the lower range in the oscillator over the last 2 months or so, or a month and a half or so, but we still cannot say that this is extreme oversold. We would have to be down in this area down here in order to be able to say that this is extremely oversold. So to me it looks like the IBB ETF is going to continue lower, and so right now we've got the market ETFs, the risk ETFs moving to the downside. They're extreme oversold, most of them, and then we've got the 10-year note that is approaching the zero line, and yet if that breaks down through the zero line, then we are going to see the market continue to fall. And so I'm pulling up the 10-year note one more time just so that you can see here, short term we're getting to the oversold level, and on the long-term oscillator once again we are looking at the long-term oscillator to be, as soon as my chart loads here, approaching the zero line probably within the next day or two. We should see it test it and if it breaks down below it, then that means that this market is continuing lower, and we are going to hit recent lows in the market. So that's about it for right now, and I'll give an update tomorrow at the end of tomorrow's trading day. Thanks a lot. Bye-bye.